Welcome back everybody to another top buy, top sell video here in the A1 Edge Finder, where of course we are going to be breaking down our number one buy and our number one sell currently listed in the Edge Finder. I'm going to give you all the numbers and all the metrics, all the scoring for why it's getting that buy or sell bias, that bullish or bearish bias. And I think that we're going to take a look at the charts as well afterwards. So lots to get into. Really quickly before we do that though, I want to say that everything in our store right now is 45% off, including the A1 Edge Finder. So I'm going to go ahead and just keep on moving throughout the Edge Finder like I normally would in one of these videos. But you remember that if you are interested in getting this software for yourself, you can do so for 45% off right now with promo code A1YT. But let's go ahead and start off like we normally would by checking out the Smart Money Tracker. Now the Smart Money Tracker is showing us COT data. That's the commitment of traders data. That is what institutional traders, smart money traders, what they are buying and selling. This is a really interesting part of the Edge Finder, and we're going to break this down for you really quickly, starting off up top with this chart here. This one just simply shows us what is the most long and what is the most short at the moment. And right now, institutional traders are very heavily favored on the long side when it comes to the dollar, 76.85% long there, followed by things like gold, oil, the JP225, and then our next currency up is the euro, sitting at 63% long. On the other hand, though, institutional traders are very heavily favored on the short side when it comes to the Canadian dollar and the Japanese yen, both sitting at about 83% short, followed by the Swiss franc, the Australian dollar, and the US 30 or the Dow Jones. Moving right along, this is a really cool chart as well, and just in case you're unfamiliar with this chart, I'll explain how it works very quickly. So what we're looking at here is we see all the same assets that we just looked at up here, but they're displayed in a different order. We are actually going off of these numbers here on the far right, these percentages. This net change percentage shows you the difference between long contracts either added or taken away, long contracts opened or closed, and short contracts opened or closed again. So we can actually see from the last data report, the last COT data release, what those institutional traders, what they changed on as far as long contracts and what they changed as far as short contracts as well. So again, for example, JP225 is number one because institutional traders opened 3,862 long contracts from the last data release, where they closed 709 short contracts, giving us overall a 8.32% net change differential between the long and short contracts opening or closing. Similarly, we can take a look at the Canadian dollar. That's down here at the bottom. A negative 8.55% net change differential. That is because they added 10,142 short contracts and they closed 8,247 long contracts. So they are clearly opening new short contracts and clearly closing their long contracts on the Canadian dollar. So that could be something to look out for, potentially shorting the CAD. So let's move right along from the Smart Money Tracker to retail sentiment, where we can see what retail traders are buying and selling. First, we're going to take a look at US dollar pairs. These are our major currency pairs, and right now they are most heavily favored long on the USD CHF, the US dollar, and the Swiss franc. That is what they're most favored on the long side at 87%. And on the short side, we see USD JPY favored at 75%. Now, the reason that these are red down here and these are blue is because oftentimes retail traders lose money or are just incorrect in the market. So we actually consider taking the opposite of what the retail crowd is doing. So if the retail crowd is very heavily long USD CHF, because more often than not retail traders are wrong in their trading, we may actually look to short it potentially. Next up, let's take a look at our minor currency pairs. I'm going to select minor currency pairs only because I'm not interested in looking at indices, commodities, or crypto at the moment. I just want to look at the currency pairs. Well, actually, you know what? I am going to add commodities for one simple reason, that being we are going to take a look at oil later on. Little sneak preview, we will look at oil because it is our number one sell at the moment. So I'm going to add USO in there, and we can actually see people are long on oil right now, 81% long. That's just, again, a little sneak preview to something that we're going to take a look at later. But CAD Swiss is our most favored on the long side at 94% from retail traders, and Swiss yen is our most favored on the short side when it comes to retail traders at 85% short. All right, now let's go ahead and just hop on into our top setups page, and right now we can see we have a whole bunch of bullish biased assets, with two very bullish bias assets in pound CAD and the JP225, whereas we only have two bearish biases at the moment, and that's CAD Swiss and USOil. Now, technically, the JP225 is our most bullish asset with a score of plus 12. However, I would rather stick to a currency pair and check out pound CAD over the JP225. Also very bullish with a score of plus 11. So let's go ahead and break down pound CAD because it's our most bullish currency pair. So I'm going to go to FX miners here, and I'm going to select GBP CAD. Very bullish bias with that score of plus 11. COT data is a score of plus 3, and retail sentiment is a score of plus 1. We can take a look at both of those numbers right over here. So as far as COT data goes, we can see that the pound is favored on the short side, just barely 56.19% over the 43.81% long from institutional traders, but the Canadian dollar is heavily shorted from institutional traders, 83.18% short and 16.82% long. So whereas the pound is kind of 50-50 when it comes to institutional traders, the institutional traders have definitely made up their mind that they are shorting the Canadian dollar. And again, we saw that with the net change percentage. When we were taking a look at that chart, we saw that institutional traders were heavily beginning to short the Canadian dollar with all of those short contracts that they opened up since their last data release. Now, when it comes to retail traders, on the other hand, they are also favored on the short side, 68% short there, 32% long on pound CAD as a whole. Seasonality is a score of plus 1. And we can see here in the month of November, we're getting towards the end of the month. But in the month of November, if you were to average together the last 10 years in the month of November to see how pound CAD trended, you would actually notice that historically speaking, it does tend to trend bullishly in the month of November, which is exactly what has been happening this month as well. Our trend reading is a score of plus 2. We can actually see the daily price chart here has slowly been creeping up and just recently got that nice, strong, very bullish signal confirmation here in the Edge Finder. We can see the different Edge Finder scores as well as price creeping up relatively steadily but slowly over the past couple of days, past couple of weeks here in the month of November. Let's finish up with our fundamental data. We have an economy score of plus 2, inflation plus 1, interest rates are a 0 or a neutral score, and labor market also a plus 1 score. These are our numbers we're taking a look at right down here. So for Canadian dollar, GDP growth 0%, pound GDP growth also 0%. MPMI changed 1.1 versus 0.5. Retail numbers negative 0.5 against 0.8. Inflation right now in Canada 3.8% compared to 4.6% in the UK. Unemployment percentage in Canada 5.7% compared to 4.2% in the UK. And lastly, interest rates on the Canadian dollar are currently 5% compared to 5.25% on the British pound. So let's go ahead and take a look at pound CAD on the charts, and let's see if this very bullish bias is backing up what the charts say. And I would say that it is. So we can actually see that we got our strong bullish bias here on November 15th. So if you look back to November 15th, that was right in this range right here, right before it absolutely spiked. And also today, Friday, it has been trending up higher as well. You can actually see, I actually took some trades using the edge finder here. So ignore these two double arrows. What happened on this candle is I entered and then I wasn't happy with my entry. I wanted to see if it would actually move a little bit lower, so I closed it right at break even, pretty much 60 seconds after I opened the trade. So nothing really to see there, but then I did end up deciding that I wanted to go ahead and buy it, so I did. And that was on Wednesday, and then I closed out of that position yesterday on Thursday after catching this huge move right here. And again, I was looking at that chart because of the very bullish bias that it had in the edge finder. That's the only reason that I found this setup. I saw that price had been trending higher. It had come back down. It had given up those big gains that it had consolidated a little bit, but based on edge finder bias and also the overall trend of pound CAD over the past couple of days, I kind of decided that I thought price was going to move higher, and it did. So I caught a nice trade there using the edge finder. Again, 45% off with promo code A1YT. But let's go ahead and break down oil now. So oil was our most bearish setup with a score of -7. COT data is a score of -1, and retail sentiment is also a score of -1. We can take a look at those numbers right over here. So institutional traders currently favored long on oil, 72.42% long and 27.58% short. But here is where we're getting our negative score here. The net change between the long contracts and short contracts is actually negative. So if we go back to the smart money tracker just really quickly and take a look at oil, we can see it right here in the red, because since the last data release, institutional traders have opened 23,657 short contracts, and they have actually closed 2,631 long contracts since the last data release, resulting in a 3% net change differential. So because as of right now, even though they are still favored on the long side, since the last data release, since they have opened so many short contracts and actually closed a lot of their long contracts, we consider institutional traders to be shifting towards a bearish bias on oil. That's why we have the -1 score there. Retail sentiment, again, also a -1 score. We can see that retail traders are favored on the long side when it comes to oil, 81% long and 19% short. Seasonality is also a score of -1, and we can see that in the month of November, again, historically speaking, over the last 10 years, oil tends to trend bearishly in the month of November. Our trend reading is a score of -2. And again, looking at this price chart, we can see just how sharply oil has been dropping, and those edge finder scores along with those drops over the past week or so. Finishing up with our fundamental numbers, we have an economy score of +1, inflation -1, interest rates +1, and labor market -3. We can see those numbers right over here. They're really just numbers for the US dollar, since this is US oil that we're looking at, but we can go through the US numbers anyway. GDP growth 4.9%, inflation 3.2%, unemployment 3.9%, interest rates 5.5%. Retail sales month over month have dropped to -0.1, and the MPMI number is at 50. Now let's go ahead and check out oil on the charts. Again, we're going to look at the 1 hour chart on US oil, and I have a little bit of stuff marked up here. I'm actually potentially going to take a trade here on oil. I have a limit order set up. Oil has been trending higher recently over the past day, but if we take a look at the chart here, it's pretty clear to see just how far oil has been dropping. I mean, this thing has been moving lower and lower and lower for a long time. It has had a nice move to the upside today, but I do not think it is going to last. So I have my limit order placed, hoping that oil reaches this point here. I see that we're now forming a, oh, well, it was red for a second. So hopefully oil will come up and tag my, my sell limit here, because I do believe oil to continue to be bearish. I'm not the only one that took oil, however. If we actually go to our Discord here and we take a look at Nick's trade signals, we will see that Nick today has also sold oil. And this is just a little sneak peek into some of the stuff that you can get here in our VIP Discord community. Again, 45% off. Everything in our store is 45% off when you use promo code A1YT at checkout. But yes, Nick is also shorting oil as of today. We can see his entry here. Edge Finder confirmation, score of -7, bearish bias here on oil. It has been trending lower and lower for a very long time now, and because of this most recent pullback towards the upside, I do think that this is a good time to get some pretty nice, hopefully a pretty nice move here on oil, but we will just have to see. So yeah, that's going to do it for the top buy, top sell video. Remember, the Edge Finder has so many more useful tabs here that we didn't check out. We didn't even check out, you know, not even close to how much what the Edge Finder has to offer. So if you are interested in getting that, getting the Discord, getting Edge Finder alerts sent straight to your phone, anything like that, go check out our store because it is 45% off right now with promo code A1YT. Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.